Now, I just want to bring your attention to Aussie Swiss on the daily time frame. As you can see, we've been in a very general downward trend ever since, well, this time last year. So for just over a year, it's been ebbing and flowing, making lower highs and lower lows, as you can see here, lower peaks and lower troughs. But if you look at Friday's close as a bearish pin bar reversal, not only does it represent our bread and butter entry as a bearish pin bar reversal, there we go, but it's rejecting a very significant level. Not only is it rejecting this horizontal level of what was once support, now rejecting as resistance, old support becoming new resistance. If we zoom in and drag our Fibonacci retracement, we can see that it's actually representing the 382 Fibonacci rejection or retracement as well, just about not quite overlapping with the level, but you can see that the high and low of the bearish pin bar reversal is essentially rejecting the zone here. Now if we drag another Fibonacci retracement from this point here, there we go, to the low, we can see that it's also rejecting the 50% Fibonacci retracement. So we've got a Fibonacci cluster at the moment. So not only is the bearish pin bar reversal rejecting the old level of support now testing as resistance, it's rejecting the 382, the 50% Fibonacci retracement. But what is also very significant about this one is the fact that it's an A, B, C, D completion, which gives extra evidence in support of the sell here. So we project the D point here, which is typically the reversal point, by dragging our Fibonacci extension from point B to point A, we can see it's rejecting just about shy of the 1.618 Fibonacci extension, which is in the same zone. So this represents a very decent potential sell point for us. If we measure points A to B here as well, point A to B, typically good ABCD patterns, in my opinion, occur when we have symmetry between A to B equaling the same length as C to D. And there we have it. It closes or completes at the D point here. There we go. So we've got about 4 solid reasons as to why this looks good for a potential sell. So what we're going to do is place our sell order at the break of Friday's low, stop loss above the high, and as soon as we make a 1-to-1, if the market does go in our favour, we are going to buy back half the position, take half our profits off, move our stop loss to break even, and anticipate a decent eventual move to the lower swing low here. There we go. So the reward to risk is generally very good indeed. And this is one thing which I always want you to consider when placing a trade, is reward to risk, as this really does kind of affect our performance. So let's just get our profit shooter on. You can see that we've got a decent 4.5 to 1, risking 1%. So that's 9% potential gain if we are risking 2%, like we typically do. Okay, so just to recap, Aussie Swiss on the daily time frame looks great because, in my opinion, that is, because we've got an A, B, C, D completion point. We have Fibonacci cluster based on the 382 and 50% Fibonacci rejection, and we also have a rejection of a level of old support rejecting as resistance. Okay, so that concludes Aussie Swiss.